No.
All right, good morning, everyone. This is Jay Wade, crypto with Crypto World, Jeff Wade. But we have a special guest today. We have Jake Stevens with crowdcandy.io. And we had Shashanka in here a couple weeks back, probably a month ago, but he's part of your team. He talked a little bit about Crowd Candy, and I know you guys are in Cancun, Mexico right now. Is that right?
Yeah, we are. We're having a great time. You can see
it's
out the window, some palm trees. Yeah.
Nice. Oh, I like your shirt. Is that a Crypto World shirt?
Thank you. Yeah.
There you go. All right. Crypto World in Cancun. Yeah. So that's cool. But yeah, so we do these educational events every Tuesday mornings. It's a great way for people to meet like-minded individuals and also to be able to just learn about new projects and new things going on. And so having you on here is pretty cool because I know you can talk more about it, but about your platform, but you're testing out Crypto World on your platform to see how it goes. But I don't want to talk, I know a little bit about it, but you're probably more knowledgeable about this project than I am. So I'm going to let you go ahead and talk and speak about Crowd Candy, and then we'll have the audience maybe ask some questions if they have any other questions.
Sounds great. Yeah, thanks for having me on, Jeff. I really appreciate it. I know Shashanka, he was there in person, right, a couple weeks back?
Yeah, he came in and just stumbled across our store in a meetup, and just came in, and then the next day we had him speaking at one of our evening events. So it was pretty cool.
Okay, excellent. Yeah, I mean, for those who don't know, again, my name is Jake Stevens. Shashanka and I were building Crowd Candy. So Crowd Candy is an investment platform. You can think about us like Robinhood or E-Trader, right? E-Trade for startups. So we let anyone in the world invest in startups. And this is a really big problem because this asset class has typically been inaccessible for your everyday consumer, just like how Robinhood and E-Trade kind of unlocked that asset of stock trading and made it more accessible and fun to do. We're doing that same thing for startups. So I always like to say, first and foremost, we're an investment platform. Now, how we do that is we happen to use crypto to allow that to happen. You'll see a lot of crypto projects, particularly in the NFT space, that are NFT projects first, and then they're trying to become technology companies, right? Which in my opinion is a very bad idea. That's a recipe for disaster. That's how you create Ponzi schemes, which a lot of those are, frankly. So we're a technology platform first, an investment platform that happens to use NFTs to make those transactions happen. Now, how we do that is really interesting, and I'm sure I'll have a lot of questions around that. That I'm going to try to save until later because I could just dive right into that and go down a huge rabbit hole. But essentially, I want to talk about crowdfunding first. So crowdfunding, if you don't know, is just like Kickstarter, right? We're doing Kickstarter for shares, essentially. So we let anyone invest very small denominations in companies that they think will have a really great growth rate and good return on their investment. And startups are the usual target for that. So you're not really looking at like your uncle's coffee shop that just opened up, right? It might be a great business, and that's not to say small businesses aren't great businesses, but we're looking at like really high growth opportunities. So we have pretty strict investment criteria. We want the company to be around a certain amount of time. We want them to have working product, obviously, existing customers or LOIs for if they're B2B and they have these bigger contracts that they're signing on, because we want that high growth potential in the company that's going on our platform. So to date, we have 6 of those companies. We're pre-launch, so we're doing a ton of marketing right now. We're both trying to launch actually internationally first. So that's another component of that makes us different than the existing platforms, is that we can actually target an international investor. And that's a product of the fact that we're using crypto to do these things. So we're trying to allow international access to investing in startups from around the globe. And I think that's a pretty good picture without, you know, getting forehead deep in NFTs. So I'll kind of open it up for questions for anyone that's got them. I'm sure there always are them. So I'm sure I'll face some interesting ones.
Yeah. Does your platform allow for, or at least initially allow for U.S. companies to engage in your platform?
Yeah, all of the startups on our platform today, and you can check these out if you go to crowdcandy.io. You can see all of our companies right at the bottom of our homepage. All 6 of them, actually, sorry, 4 of the 6 are US companies. One's based in Dubai and one is in Canada, but the rest of them are US based startups. Now, for the investors themselves, initially, we are not allowing US investors, and that's because of the way that we're doing the NFT trades. So the SEC still hasn't been very clear on whether or not an NFT is regulated as a security. And since that's how we're selling these shares in the companies, we don't want to get mixed in with the SEC at first, which is why we're focused on the international investor first.
But you're allowing international investors to invest in US-based companies.
Exactly.
Okay.
Is there a reg for that? For that.
I didn't get that. Could you?
Regulate. They're listening to us, but in crowdfunding, is there a like the Reg D or Reg A or things like that to be able to allow companies, U.S. companies, to take investments from foreign investors?
Yeah, so essentially the only investor that is going to appear on any company's cap table is CrowdCandy. So we can structure this as just a Reg D investment versus if we were to do things domestically, then we would have to go through the regulation crowdfunding process, which is the Reg CF, which is what all of our, if you know about equity crowdfunding, there's existing platforms that do this called like WeFunder, Republic and stuff. And eventually, if we, our plan is to make it into the US market, that's what we'll have to do when we get there. But no, because the SEC's jurisdiction doesn't cover individual foreign investors, the only people that they're considered with is that essentially it's CrowdCandy investing in a US company. Yeah.
So will the companies know who's actually invested since they're using NFTs? Is that anonymous to the company?
Yeah, we have to go through KYC, just like any investment platform. KYC, if you're not familiar, is know your customer. So that basically just boils down to like get someone's passport information so that you know that they're not a terrorist, they're not trying to launder money using your platform, and a few other things. But yeah, we have to go through a KYC process.
But will the company know who those investors are?
Unless we give them an email list, which I don't know why they would want it. Maybe they would for if they wanted to send follow-ups about how their company is doing later on, which is something we might do. But no, so that's really the appeal of a crowdfund, is that you don't have 1,000 people on your cap table. It's just kind of rolled up into one company that appears on the cap table.
Well, and to that point, this might help your question. Jake, is that on-chain or off-chain that those transactions are in?
Yeah, the transactions happen on-chain. So what we're doing that's pretty interesting is the contract is a hybrid between on-chain and off-chain. So essentially, say a company is raising a safe through us. The terms of that safe are off-chain, but they're going to list out in that contract all of the addresses of all of the NFTs that have been allocated as, say, partitions of that safe agreement, right? So then those are then tied to the on-chain NFT whose address is on the off-chain contract.
And as far as I get Ken's question there, sorry, go ahead, Jake.
Yeah, so essentially we know where all of the NFTs are at any time, and we know which ones are tied to which campaign through that on-chain, off-chain process.
Okay. And so that makes sense. Ultimately, you've got the off-chain agreements. There might be some regulatory compliance, but you can't share. That harkens back to something on-chain. Now, whenever the transactions people purchase an NFT, is that purchase, that interaction is on-chain, I would imagine? And if so, also what chain?
Yeah, on-chain on the Ethereum ERC-721, just most common blockchain, and that's so that we can kind of broaden up the liquidity of the asset. So a really big problem with here, and I can kind of share with you one of our competitors, a big problem with the existing competition in this space is that these platforms are essentially loan solicitors. It's a really bad investment when you really break it down. So I guess I could get into this portion. Can everyone see my screen okay? The infinite hallway of screens? Awesome.
Yeah.
So this is probably one of our more prominent competitors, Republic. These guys are a regulation crowdfund. You can see, they get pretty good traction, a few million on some of their campaigns. But a big issue is that while all of these projects are pretty appealing, the investment itself is a really bad investment when you break it down, because you're essentially giving this company a long-term zero interest loan. They're trying to give me the sign up. All right. But essentially that's what you're doing, because you have to wait, 5-10 years until this company has an exit event, until they do a stock buyback, they get acquired, or they go public, for your investment to make a return, right? Which I think is pretty dumb. Like, I would never invest in something like that. But with our platform, because we're treating the shares of the company as NFTs, you can trade them whenever you want to anyone you want that's also on the blockchain.
So in that way, Jake, if I might just make sure I answer this question. So is there going to be a conversion at a later date, meaning that becomes a fungible market? There's a market for the NFTs where they can create value before there's some kind of a liquidity event, let's say some going public or whatever it might be. But at that point in time, is it predetermined contractually that the NFT will represent something of equity in the future, or is that kind of it starts with the NFT and that's kind of more of the talks? So I guess how would you handle that long story short?
Yeah, that's all handled by the off-chain contract that dictates, the terms of how the NFT converts to equity in the company. So essentially, CrowdCandy is the custodian for and this is the same process actually of that company I just showed you. We're just treating the shares as NFTs, but they're essentially we're a custodian for the shares, so we hold them. The NFTs, you're kind of trading around, call it like a forward contract for the shares. So you're trading around the ownership of the profits that those shares will represent at some point, right? So and then in the term, at the point that the company experiences liquidity, they would buy the shares back from us. We'd pass the value of the share onto the NFT holder.
Okay, so obvious question, I think you already said it, but in simplification form, you have all the shares. Whenever you sell an NFT, it's a contract that says that this NFT is worth a share at a future time, whenever it can be converted. And so it's actually attached to like real shares. Like, it's not just like an NFT with kind of a loose concept without any legal framework for protection of purchase. Like, it's actually something you can convert later to get equity.
Yeah, exactly.
Cool.
Jay, can you put up your CrowdCandy website and share that with us?
Yeah, absolutely. Great. So this is our landing page right now. We've got, sign up for early access here. It's kind of where we're directing people. These are the companies that are currently raising through us. These first two are going to be the first ones to raise. So you can see all these companies are, we've got a whiskey company here. This is a novel dating app, a really cool concept, actually. This is like a knowledge transfer platform. So you can actually get paid for kind of doing what I'm doing right now. If I just signed up on this platform, people could book meetings with me and get paid. Obviously, Crypto World. This is another company that Jeff is a part owner in. They're building really cool, actually. They're building sleeping pods for kids with autism. So any project that we think is high growth and has a lot of potential for crowdfunding, we'd throw on here. Doesn't mean we're not open to crypto. I think when the right project would come around, yeah, we would be open to crypto. But yeah, these are some of the companies, kind of running through the value props here that I've already talked about. But yeah, that's essentially it.
So do I connect like my wallet through the site, and that's how I actually like get involved in it? Or I guess what wallet would I connect? What chain are you guys using?
Yeah, you'd connect your Ethereum wallet and then invest through that. Really good question. That opens up a really good question though. So like I said, we're trying to be a investment platform first that happens to use Web3, right, to make the investments happen. So this was actually the very first thing that I brought up to Shashank when we initially met about the project, because it was his idea first. I said, a lot of these projects that happen here, a lot of the investments that happen on Republic, they're impulse purchases, right? There's someone that has disposable income at any given time of a few $1,000s, and they just happen to be like, yeah, I'll just throw it in one of these projects. That seems cool. So if they have to have a wallet, that's a huge barrier to entry, right? So very quickly after our first round of campaigns, our focus is going to be, and honestly, frankly, I'm trying to push to make it happen for our first round of campaigns, to have a fiat on-ramp. So someone can just put their credit card in and invest in any of these campaigns. And essentially how that would work, we're getting real nerdy here into the conversation, but we would basically mint the NFT, hold it in a wallet as a custodian for them. And then whenever they want basically the keys to that wallet, we could give that to them at any time they wanted down the road. But they would just purchase the NFT with their credit card, and then we would just hold it for them for a little while until they wanted to set up their own wallet and get it transferred there. Because like I said, I that's what we're competing on. We're competing against these guys where I can just click in if they don't absolutely force me to make an account. I can just click in and go through, punch in my credit card, and boom, have shares of the company. No, they're going to force me to, but have shares in just a few minutes. So we don't really want to rely on people having to have wallets, because that's not the whole point.
So if you guys are acting as the custodian on this, obviously you've got to have some pretty robust security in place.
Yeah.
Because obviously the last thing you want is somebody to come in and hack, and then all the investors are like, oh.
Yeah, absolutely. Like any NFT project, I mean, the great part about being on chain is the fact that it has its own levels of security built into it. But especially if we're a custodian for the wallets themselves, we need to make sure that we have that level of security built into being the custodian. Yeah.
So to that, are you requiring yourself to have X number of dollars, if you will, fiat or whatever, to cover any losses that you might have? So in the case of an insurance company, they have to have an amount in a pool that could cover if there's everybody gets sick at one time, and they've got to cover all these payments. Do you guys have something like that in place, or are you going to have something like that in place to cover the what if scenario?
Yeah, I mean, we're raising around a fundraising at the moment, and part of that is going to be set aside for exactly what you're saying. So yeah, we would have assurances there in the fact that we'd be able to have liquid cash at any given point in time. That'd be really bad if anything were to happen and we couldn't cover it like that. Yeah.
Great.
Interestingly enough, So that's a fantastic question, by the way. I actually wonder, comparatively speaking, if the risks would be minimized because of the way the platform works. Is you could always, the NFT is representative of shares of stock, but in the event of a hack, you could just redefine through a contractual agreement with an actual business that their securities are now represented by a different NFT. So you could negate the value of any NFTs that were hacked. Now, of course, there's bridge attacks where somebody gets in, like Axie Infinity or something like that. Like where you can get in and get in people's wallets, and of course that security is involved there. But I guess the question would be is could you not at that point in time just do the Thanos snap and go ahead and change out like what NFTs, basically redistribute, because you already know all the wallet holders, redistribute a new NFT based off that still attaches to the previous security in order to rectify the previous hack?
That's a fantastic approach. I think, like I said, I always learn something new whenever I have these Q&As, which is why I love doing them. Yeah, that would be the way you do it. That would be a fantastic approach to someone hacking the NFTs. You would, because there's an off-chain contract, you can just alter the off-chain contract and say, hey, these one redline these addresses. These are the ones that got stolen. We've reallocated them. These are the new addresses.
Yeah, and to your question, Kim, if it's on chain, there is a way to, like, if you've got blockchain investigators now that will go into things and track transactions, you can very easily, because it's all on chain, see who has things so you can redistribute to them like pretty easily. We're talking in minutes or hours, not like days. And you can also, if there's any secondary benefits that get implemented over time, like let's say that NFT is also a gate in the interim to being able to join a conference. So not only do you own the NFT that represents a share, but you can join a conference, or depending on the type of NFT, you can have a special engagement with the founder or be part of some kind of metaverse sandbox experience or whatever it is. Then you can also say that anywhere where that NFT is a gate, key, that you can just basically, you'd have to change the smart contract, but you could make an addendum to it that would make it where those NFTs are no longer that gate anymore. So it lose all value for anybody stealing the NFT. So at that point in time, so even if there's secondary values, then that gets stolen, but you can't track it down. So question that I was going to have is what about secondary markets on the NFT? And I guess to clarify, it's one, is there a secondary market for the NFT? Because naturally people think that it's a value and they might be able to trade it. And then secondly, how does that affect the value if there's an ongoing sale? Like, let's say that there's a secondary market and all of a sudden it starts getting hot on the secondary market. Are they correlated with one another, or do you kind of have to operate in a funnel and just whatever happens over here in order to finish out the ongoing race?
Yeah, so I think what you're saying is how is the value of the NFT tied to the value of the company?
Well, how is the value, like, let's say that let's say I've got company A, I sell the NFT to investor A. Investor A goes, there's a secondary market on Solana or OpenSea or OpenSea, let's just say. And they go, I believe that there's value here, and because of whatever particular type of NFT that I have, I want to start selling it on OpenSea. And then people start ramping up the value on the secondary market. Will that affect the initial market if investor B wants to also buy from, Crowdfunding? Like if they want to come in and like investor B, does the impact on OpenSea impact anything on Crowdfunding, or is it just kind of always stay in its lane regardless of whatever happens on OpenSea? Or is it not on OpenSea at all?
So this is all theoretical because this hasn't happened yet, but I would assume what would happen here is the company would just choose what's most favorable, right? So if the value of their NFTs were trading at a valuation higher than the last round they had just raised, right? Maybe because of information that's come out about the company, like, hey, they just closed this really big deal, or they've had this number of users now, they would use that to their advantage. I'm sure they would tie it to their valuation and say like, hey, investors in our Series A round, this is our value, and look at where our NFTs are being traded at. They would probably just choose, and then if the valuation were lower than what they were looking at, they would probably just say like, oh, this isn't indicative of our valuation because they're not directly tied to our price at any given time. But in terms, that's all kind of independent of what we're doing. We're going to try to track that valuation via the NFTs on the app. So similar to how you can look to Robinhood and see your stock ticker and read the graph over time of the valuation of the stock, we want to do that with the NFTs by kind of tracking not the floor price of the NFT, but rather like what were the average of the last 10 transactions that happened. So that way you can kind of, as an investor, go on to our platform and see the performance of the company over time. And if that's helpful to the company in terms of their valuation, fantastic. We hope it is, because you can usually get, 3 to 4 times the valuation in a crowd fund than you can get in an institutional round. And that's just the math of how these things work, right? Like an institutional investor, they're looking for 100x return on their investment. That's just the nature of funds. Like they know 90% of their projects are going to fail. Those 10% need to make up for the rest. So they're trying to drive down valuations, pump up as much cash as they can into all those projects. But an investor like you or I, a 5x return is like, that's pretty good, so we're willing to take a much better valuation for that. So we're hoping that helps the companies in that way. Does that answer your question?
It does, and I'm going to try not to monopolize it. I've got about 42 others. It's super cool, and of course, that's fantastic. I'll pause.
What's your fee structure? Like, how do you guys generate revenue from these projects?
Yeah, a few different ways. So the first is the same as some of those domestic competitors that I showed, just taking a percentage of the funds that are raised to the platform, which is typically 5 to 10% depending on the platform you go on. The second is this is the really cool one, because we're using NFTs and we expect there to be some liquidity in how they're traded. We can tie in a royalty fee so that we make a percentage of the transactions that happen in that secondary market, right? So as the stock is traded, we can make money. And what's even cooler is on top of that, we can actually share some of that royalty with the companies whose NFT it is, right? So we can say like, hey, pay us this amount up front, right? We'll take some percentage of the funds raised, but as your stock is traded, as your company does better and better, you're going to make that back over time. As these NFTs are traded, you're going to get some percentage of those funds raised. So and we can actually incentivize the company to do certain actions that are favorable for their investors by kind of saying like, hey, if you do this, you can get higher royalties, or you can get access your royalties. So a lot of these platforms, it's black boxes. When you invest in these companies, it's like, all right, well, they just closed their fundraising, and since they're a private company, they don't need to share anything. See you in 5 to 10 years when we go public, right? And then they just close off. We want to really cultivate an investor relationship, right? So our plan is for these companies to have either like quarterly or biannual updates where they can share with their investor base, like, hey, this is what's happening. And we can incentivize that by telling them like, hey, we'll give you these royalties on your NFTs if you do these actions, right? Which I think is a really good way to do things. Come on, I know there's like 50 questions.
I've got plenty on deck.
Yeah.
I guess I have one here. If there's a secondary market, if these NFTs represent contracts, which represent contract that may turn into a security, and there's a secondary market for securities, for these securities. Number one, how are they not securities? And two, what's to prevent manipulation? All the manipulation that the SEC rules are there to prevent. What's to stop that from happening with the trading of these securities for these startups?
So let me address your first question. They absolutely, by the why is it not coming to mind right now? The test that the SEC uses for securities.
Howey test?
The Howey test, exactly. These would be securities, yeah, absolutely. Which is why we're trying to avoid the American market as much as possible, because the SEC is being really ambiguous about NFTs being treated as securities. There's not a standard for it yet, and we just don't want to get slammed with some fines that we're not prepared or funded to fight, right? So that's the first part. And the second is, investing in startups is a personal risk, right? Just like any investment. I would say, it used to be, to use a really, really old analogy, right? There used to be regulations around land ownership, like only certain individuals could own land, just like how in today's world, you have to be an accredited investor to invest in startups. The lines about what that even means get blurrier and blurrier every day. And frankly, I think it's just kind of dumb. I think everyone should have access to this asset class, and that's what we're trying to offer.
I guess too, if it goes in the secondary market, the company like Crypto World would not reap the rewards if from the secondary market side. Is that correct?
It's royalties.
It's just, we would just get royalties on the transactions.
Yeah, exactly. What other rewards are you thinking, though?
Well, I'm just trying to think of the question he asked as far as in security. We're not gaining or losing from the secondary market. Crypto World isn't. So it's not investable, I guess, in a way to where we're affected by it. The secondary market is kind of on its own. If people want to trade my NFT and they make all the money from it or lose money, then it doesn't really affect me except for the royalties. So maybe the securities can be considered, the royalty can be considered royalty perhaps, but I'm just trying to think of how that would look.
I'm just thinking of an example, just that if you're still offering new contracts on your platform, right? At I don't know what the price is at, $100 a unit or something like this. I don't know. We have to pick a price, and then there's a secondary market for those same fungible, basically, NFTs, which represent the same contract, and the secondary market, it's trading on the secondary market. It's now publicly traded, basically, and someone pushed that price down, right? And why would someone buy it from your platform if it's publicly it's being traded? Then someone would buy it from that, and that would push the price down, and it could harm. I mean, this is where the manipulation can happen. Arbitrageurs can come in, and just like any market, I think that's why maybe like shares for companies. I'm not an expert on this, but I think that might be why shares for companies can't trade publicly unless they go through all these hoops and regulations, and they have to have audited financials and all this kind of thing. I don't know.
So let me try to reframe your question so I think I can understand it better. Your situation is, you're saying someone comes in, buys up all of the, so there's a portion of the company that's allocated for these NFT sales, right? Whatever the company wants, like 10%, whatever. You're saying someone comes in, buys up all of that 10%, and then sells it super cheap because they're trying to tank the company's valuation.
Hold on, can I ask you a question? Is the same issue publicly on the marketplace while it's still listed on your website, or do you have to close on the website before you can sell on the marketplace?
You'd have to close on the website, yeah, before you could sell in the marketplace.
So it would never be the same issue. It'd be like a next round or something that would be listed on the website while there's potentially the first round trading on the marketplace.
Thank you for clarifying. I actually.
Right, and it's the same company.
It's the same company, yeah. So
it represents so much. It's equity. It's not debt that you're selling. Right?
yeah,
It's equity.
I get what you're asking though, for sure. But with it being secondary rounds or something, maybe there's. Yeah, but you would think that people wouldn't, like you just said, wouldn't buy on their website if they can get the prior round at a lower valuation publicly or on the marketplace,
Could affect future rounds.
And also, someone could pump up the price, perhaps on the secondary, which would lead it. You see,
insiders could pump it up.
Well, I don't know about insiders. It's just the arbitrageurs, the market. Anybody with, this is how yeah, it's manipulation.
Yeah,
certainly. If it can be traded before it's can be traded, someone's going to manipulate it, or someone will arbitrage it at least.
Well, yeah, but so like if you buy one NFT for like say one Ethereum, are you cashing out the value of the Ethereum that day and giving it to the company? Or are you giving the Ethereum token to the company? Because there could, I mean, let's say Ethereum's $1,500 now, but in a year and a half, maybe it's $15,000. You know, does it 10x? You know, well, the value of that company's really gone up, or the NFT's gone up. But if you gave that guy $1,500 instead of an Ethereum, and theoretically that there's a big gap there in the money. So I was just wondering, do you convert it to fiat and give it to the company, or do you give them the crypto?
Yeah, so yeah, there's a few really good questions in there, but I'll just address the last one. Yeah, all these companies, they're fundraising for a reason, right? It's because they want cash to spend. So we're going to be transferring it to fiat for them. And the ways we're doing it, they shouldn't be taxable events. So basically, we'll take the money that we're raising in either stablecoin or Ethereum, take it in, transfer it to fiat, transfer it over to the company. Yeah, so that they have that fiat currency, and then it's not fluctuating, you know, wildly as their campaign's going on. We're actually exploring potentially doing multi tranches of the fundraise, right? So people can take out cash in earlier points in there, because these raises can go 3 to 6 to, I've even seen as long as like a year in terms. So just so people have access to funds sooner, we might be able to do that.
But so if I wanted to set, if I bought one share for one Ethereum, and it was $1,500, I'm going to use USDC or USDT or something like that.
Sure.
The value of that share is going to be determined in stable coins, not Ethereum, even though I use the Ethereum to convert it, right? So is that what you're saying?
Yeah. So we want to offer these in stablecoin. Exactly what you're saying. So that the value is not going to fluctuate too much over time. But even if it does, that's not too big of a problem, because similar to, you might have seen people like selling real estate as NFTs online. They just, and obviously, you know, Ethereum just 50% increased in a week. People are just going to readjust the price of their NFTs, right? So that's priced according to the market and what they think their real estate is worth, right? Because no one's going to, all of a sudden you were listing your house for the equivalent of $10 million in Ethereum, and now it's going to cost you 15 million. Like, no one's going to buy that, obviously.
Jake, we got a question online. You had mentioned that you're trying to avoid the U.S. market. Is that because of FINRA and SEC regulation in regards to investing in C Corps? Does SEC allow non-U.S. citizens or residents?
What's the last part of the question again?
It said, does SEC allow non-U.S. citizens or residents? I'm assuming FINRA.
Yeah, so that's similar to one of the earlier questions brought up. But yeah, absolutely. We're avoiding it completely because the SEC has been so ambiguous as to how they're defining NFTs as securities, or rather the lack thereof. So we just don't want to get caught in any of that mess between them and the FINRA. As far as the second part of the question, yeah, there's already regulations. It's a Reg D for international investments from an international investor to a U.S. company. Our company is actually an international company, so we would just follow that. The way that those funds were procured isn't really any of the SEC's business, so they wouldn't look into that. They would just say, okay, there's this company that's investing in a U.S. startup. We're the only line on the cap table as far as they see, so that's how it's done.
Are most startups that are in the U.S., are they doing a safe, simple agreement for future equity?
Yeah, and that's just because it's the best thing you can do. The safe is so much better than doing a convertible note. Well, it's just a convertible note without the debt side of things. Yeah, and then I assume the follow-up question is, how are we tying the value of the NFT to the shares if it's on a safe agreement?
Right.
That would be the natural follow-up question from that. Yeah, so that would basically be how that's done. Wow, you guys are really asking the tough legal questions. So pretty much, okay, Crowd Candy's up here, right? Holding company. Startups are below us, right? For every startup that invests on our platform, we create a special purpose vehicle company, right? Like an LLC that sits below that company. That company owns the shares from said startup crowdfunding with us. Now that startup, that SPV that owns the shares, they're the ones that are soliciting the funds, right? That are raising, that's minting the NFTs that are then raising the funds. People are actually owning shares in this company, which has equity ownership in startup investing, in the startup that's crowdfunding, right? So these NFTs now represent a portion of this company, whose entire asset structure, let's say, is just shares in the crowdfunding company. So it doesn't really matter what value like when the company goes on and raises a price round, right? And then you'd actually know how much your money converts to in shares. It's the same process as investing in a safe today. It's just now the NFT is representing some dollar value that will then determine the number of shares that the NFT stands for at that later time when the company goes on and raises a price round. Yeah. Any more fun legal questions?
So how would a traditional venture capital firm view your process?
Oh, they'd hate it. Because we're trying to kill them. They see it as competition, right? Which is why a lot of them, the sentiment around equity crowdfunding was so poor for such a long time, because they see it as a threat. Now the sentiment has shifted, I'd say over the last 2 years especially, towards it being more market validation, where people are saying, oh, people clearly want this product. But prior to that, VCs would be like, oh, you can't, it was like an old boys club of like, oh, well, since you raised an equity round, a crowdfunded equity round, we don't view your companies favorably and we're not going to invest. So they've been gatekeeping it for a long time, but you're seeing that sentiment start to shift. And I have a lot of friends in startups that have raised through crowdfunding and then gone on to raise institutional rounds, no problem. So we definitely are seeing that sentiment shift, but not without a fight, that's for sure, because they don't like it. And especially they don't like it because it hurts their bottom line, right? Like I mentioned before, the valuations are better on equity crowdfunding. So they don't like the fact that they're seeing, if they didn't get into the round before, right? Because these are usually the first or second round of a company's fundraising. So if they didn't get in prior to the crowdfund, the valuation is now way higher because of the crowdfund. And that's really why they don't like it, because now it's cutting into the amount of money they can make by investing.
So what's some of the marketing strategies for Crowd Candy?
That's really the focus of what we're doing right now. It's why we're in Cancun. No, I'm just joking. We're just here for fun mainly. But that's a lot of what we're working on right now. So really, there's 3 pillars of marketing. You can do influencer marketing, content marketing, and performance marketing. The 2 that we see being most useful is going to be influencer and performance marketing. So we're doing a bit of both of those in the target countries that we're focused on right now. So I actually just got off a call just prior to this with an influencer in one of our target countries in the Southeast Asian area. So we're trying to, work directly with them, influencers in like the fintech and crypto space, so that we can get, influence investors from those areas. And then once we know what kind of audiences we have, we can take those emails, create lookalike audiences that we can then target with our performance marketing. So yeah, just trying to work with the local population there, because we're a investment platform. It requires a lot of trust. So we're trying to work with the people that have already established that trust to kind of share it with their audiences as well.
You talk about the countries you're focused on right now?
Yeah, those would be the ones that have the highest crypto adoption. So the thing about crypto in the US that I'm sure everyone at this talk is more than aware of is that it's just a toy, right, for speculation. It's not, you don't send crypto to anyone. Maybe someone here has, I just own crypto. I've never sent it to someone in a real transaction before because I'm speculating with it. In these countries, it's an actual tool because their banking infrastructure is so poor. They're using stable coins and the like to transfer money every day to their friends and relatives, right? So we're really targeting those countries where people have already adopted this as a tool that they use day in, day out. Those would be countries like in Southeast Asia, Northern India, Northern Africa, South America, Brazil especially. Those would be the target customers, yeah.
So do you intend on doing multiple rounds through this platform or one round? And part two to that question, how do you define valuations at each round, whether it's one or multiple?
So your question is, can someone do more than one round on CrowdCandy? Yeah, they could. They would just have to, we would just mint a new set of NFTs that would be distinct from the original set. Yeah, so they absolutely could. It would be a new, it would just be a new round. The value of the prior NFTs would be equivalent to the new ones. But yeah, there's no reason why they couldn't.
Well, the reason why I asked is ultimately that ties into a previous question about secondary market on what's a security is how do you, so at the end of the day, I think I think we all agree it's extremely virtuous to want to create a market where people can buy into shares as individuals that aren't accredited investors. Anybody who's done the math on it can see that VCs, when you think about the amount of money you make on a public company buying Amazon stock when it goes low, but you compare that to the amount of money that the angel investors and VCs made, and you compound that over the course of since the India company, and kind of like the way that all those stocks have been done, the money has always been majorly made for the people that were in on the ground floor. To the point where you distributed risk-wise, you pretty much, as long as if you had a pulse and you did it and you had enough resources over a long enough timetable, the house always wins. So clearly, that's a system designed to aggregate power to those who have the wealth already, and there's a gate where those who don't have the wealth are able to enter. Now, the counter argument to that is, okay, what you're doing is protecting those people at the ground floor who might not understand exactly how arbitrage would work and price manipulation and why maybe someone might want to artificially deflate the value of an NFT between one round and another in order to have like a corporate takeover, or they might want to increase it in order to make over speculation to fund out a round, or maybe just the company dissolves and if there's legal protections there, they can kind of move on with the funds that they've raised, et cetera, or just overfund themselves because they think it's in their best interest to have the most possible money, but in doing so doesn't leave any money on the table for people in subsequent rounds. And I bring this all up to say is that these are problems obviously you're dealing with, we're all dealing with, and those similar in the space are dealing with. I guess, what do you see as far as regulation by governments, which is in the works, obviously hard and heavy, but self-governance, and do you, inside of like the community, like the Web3 space, and do you feel like they're, in your mind, what do you think the next steps are there? So if we're going to, for instance, if you think that self-governance is the route, which by the way, maybe you don't, you think that it's governments, but it's through lobbying, like or some kind of like lobby DAO or something like that, or blockchain back. Or if you think it's self-governance, what do you think that looks like over the course of the next couple of years? Because that could determine how all of this plays out.
Yeah, no, you're right. It's a heavy question. I completely agree with you. You know, our mission to democratize early stage growth is one I really believe in, and one that is going to have challenges for sure as we grow, that we have to watch out for, like you said, with manipulations and such. In terms of either self-regulation or government regulation, how that's going to affect things. I mean, the piece of our business that would interface with that category would, I guess, kind of come down to the currencies themselves, right? As I mentioned, we're more of an investment platform first that just happens to use the currencies as the means for the investment, as the channel which you can invest. Interesting. As regulation,
I guess to clarify on regulation, what I mean is like, should it be obligatory for everyone to create a shareholders report? Inside of that shareholders report, what should be contained? How often should that come out? What level of compliances should go into a system that we ourselves would create? Like, what does that balance look like where we feel like you still have the democratization there, but you also don't force the government's hand to be like, this system's like, look at it, just ripping the money away from people because they don't understand what they're getting involved with. The same compliances aren't in place, and we need to step in and be the big kids here in this party and make it work.
Yeah, I mean, frankly, I'm not sure why they haven't done that already for Republic, because when I look at it, like one of the competitors I showed you before, when I look at those platforms, I see them as just objectively very bad investments, right? There's no transparency into the company. Like I said before, it's a long-term zero interest loan you're giving the company, which you could argue is the same if you're an angel investor, but at least if you're an angel, you know the risks and you have the capital to deploy, right, that amount. With our platform, we're trying to generate a lot more transparency, right, through the efforts I mentioned. Create a community for each of these companies that they can inform about what's going on within the company. Like, hey, we experienced this growth over the last 3 months since we last updated you guys, and really be that level of transparency in investing, right? Let alone Web3 investing, but just in early stage investing, because there's just not been a lot when it comes to either early stage startups or Web3. Right? There's a reason why every project you invest in on Web3 has this like stupid white paper you have to read, because every project is different. Every project has a different legal process. We kind of want to be that layer of trust where you know that every process is the exact same from a legal standpoint. Every project is vetted and as trustworthy as we can make it. Now, obviously, 90% of startups fail. I'm hoping with our vetting process, we could beat that down to maybe 60% or 50% of our projects that fail. But that's always going to be a risk, and we need to be really clear about that. But I think you can make that more clear by being transparent, and that's going to be hard to coax out of these companies. The level of transparency that we can get out of them, right? Because they're private for a reason. They don't want to divulge all of this information too early on for both competitive reasons and for investment reasons. So we're going to have to strike some balance of like metrics that are honest, but also transparent, right? So they're optimistic, but transparent. So they're not going to be sharing their cash on hand, for instance. That's just a given. No one's going to actively say their burn rate month over month, but they can share, how many employees did they hire? What are they looking to do next in the next coming months? How many users did they just get on board? Things like that. Yeah. So yeah, that's all just a way to say we want to harbor more transparency than there's been in this sort of investing before.
Jake, is there a cap on how much, like on a safe? I think the cap is crowdfunding $5 million is the cap and can be raised. Is that same with you guys? Pretty much the same rules?
In theory, no. In theory, we could raise, you could raise as much as you wanted through our system. That's to say, I mean, we're probably just going to be I think the biggest raise that we have from a company on our platform right now is they want to raise 1.2 million. But no, there's no reason in theory we couldn't raise higher than 5 million, which is the cap right now for a Reg CF.
So let's say a company wanted to go through this process. What would that look like? And I'm not going to put out the whole roadmap because I kind of go in the blanks. But just like, for example, they reach out, they connect with somebody about a meeting, and then from there, kind of do deep dive into kind of further dialogue of what the contract might look like. Is there an assessment that's made as far as like an analysis on the project? How do you define the valuation? What are ongoing commitments? So let's say that project came on. Is there any obligation to either party to each other over time? And so what does that look like? So let's just say that a project came and said, I want to jump into this. What would happen next?
So yeah, you're saying in theory, you're a company, you want to join Crowdfunding to crowdfund. What are the steps that you go through?
Yeah. Just like, what does that journey look like?
Yeah. So the first is we'd vet the company, right? So far, all the vetting has just happened internally between me and my co-founders. Like I said, our criteria is pretty strict. We want them to be around at least a year. We want them to have a working product, because many of these companies that you'll see on Kickstarter, for instance, they're getting a really bad rap. Kickstarter in particular is getting a very bad name because a lot of these projects, I have a pretty experienced engineering background, and you look at some of them and you're like, that's just not, from an engineering standpoint, it's not feasible, right? You're never going to be able to deliver on this, but your average consumer might not know that and invest on them. So we really want to make sure that doesn't happen. So they go through our vetting process. When they finish the vetting process, if we decided that they're a company that we want to work with, then we have them create marketing materials. So that comes in the form of like, hero images, writing biographies about the team, creating a video just to overview like what the project is, maybe have the team describe it, show it off, write about some traction to date, then the terms of the deal, obviously. The valuation, that's, valuations are an art, right? So that's kind of going to be up to the company and what they want to choose. We can advise them on that, on like, hey, maybe that's a little high, or like, actually, we think you could be getting a little more than what you're currently offering. And then once all that marketing material is created, we'll actually simultaneously to that, we'll be doing marketing on our side, marketing to the countries that we're targeting, and they'll be doing the same, right? And we'll be assisting each other, saying like, hey, we've seen this work really well, so you should put some marketing dollars into these audiences in these markets. But from there, the campaign launches. Really, the thing that we're trying to do differently than the domestic competitors actually comes down to the launch. So a lot of these platforms, they'll even tell you they won't help you out with marketing until you hit 50K, 100K in investment. So essentially, these rounds turn into friends and family rounds until the first 50 or 100K. And even after that, it's still mostly on you to do the marketing. I've already done interviews with people that have successfully raised from these sorts of campaigns, and across the board, they said like, yeah, we hit that 50K, 100K mark, and it was worthless. Like their marketing efforts were terrible. So we really want to leverage the community aspect that comes along with Web3, where people are really engaged in projects, and having people really hit those, like not have to rely on that cold start problem, right? And not have to rely on friends and family to solve that for them. They could come on our platform and have a community of people that they can turn to, that are ready to invest in their project from day one, so they can close out that first 50, 100K. Yeah, so that would be how we do things differently than the other platforms. The timing on which the campaigns close is really dependent on the campaigns. Some of them close out right in the beginning, the really hot deals. Some of them are slow burns, and at the very end they close, and some don't close. That's just the nature of how things go. But yeah, we're hoping to increase the percentage of the ones that do by being a very exclusive platform.
So Jake, we passed the kind of the allotted time that we had for this. Do you have, if somebody else had questions, is there an
Email they can reach me at? Yeah, absolutely. Feel free to reach me at jake@crowdcandy.io. That's just my personal email. Happy to answer any questions, or if you've got anything that you think might be useful for me to look into, happy to look at it as well. Guys, this was excellent. Really learned some awesome stuff, especially when it comes to, if we were to ever face fraud when it comes to NFTs. I'm going to use that one. That was a great answer. So yeah, these talks are always useful, and happy to do this again anytime with you guys. This was great.
Yeah, thank you so much for taking the time, and we'll
you guys too.
I'm sure we'll talk more on what we're doing here with you guys.
All right, take care, guys. Great
Have
chat.
fun in Cancun.